Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Friday, the 6th of September, the TGI. Thank God it's Friday, the 6th of September, Bull versus Bear webinar. Steve Miley here on the call on Jobs Day. Today's Jobs Day, US Employment Report, NFP Day. Pretty much since I've been in the markets, which is forever, it's been the biggest day of the month, and continues to be that way. CPI sort of stole some of its thunder over the last few years, but jobs report back firmly in pole position in here, and certainly we're all watching it today. It could have a significant impact on where we go, not just today, but going into the balance of September and maybe the balance of this year. And it's probably going to have an impact on whether the Fed decide to go 25 and 50. So we're seeing a lot of reports and analysis around that. Just looking back before we look forward. So this was yesterday. We did get the ADP number. We also got the ISM non-manufacturing number yesterday in here, which slightly beat expectations. But eyes were on the ADP number in here. And where's the ADP number? Which missed expectations. There it is. 144,000 jobs added. Expected only came in at 99,000. So that's significant. Skipping forward to where we are now going into today, just a quick heads up. We did have some German industrial production numbers today. Very disappointing, 2.4% negative in here with 0.4% negative expected. But all eyes now on the jobs report in here. And really where we are on the non-farm number, we're looking for, if it's down at 100, where that kind of disappointment we saw, 144 expected, 99 was the outcome on the ADP number yesterday. If we get something similar around 100K mark, probably expecting now stocks to sell off. So previously, we remember we were seeing kind of a somewhat counterintuitive weak data markets rally, because weak data, we weren't expecting a soft landing. We were expecting a soft landing. We weren't expecting a hard landing. A hard landing being the economy goes into recession. So we weren't expecting the market to go into recession. We were not expecting the market to go into a hard landing. So when there was actually a weaker number, what we call a soft number, a weaker number, then stock markets are actually rallying on a weaker number, because the anticipation was, well, we're not going to get the hard landing anyway, and this will make the Fed more dovish, more likely to cut rates, and that's good for stocks. Now what we're seeing is the weak number is actually seeing, wow, we're potentially going to go into a hard landing. Yes, now the expectations are the Fed are already going to be more dovish. They're going to potentially be even more dovish, but hard landing is not what the economy wants to see. It's not what the stock market wants to see. And that's what the jitters are. That's what the sell-off we're seeing over the last week or so has been about. Also, we've had some tech concerns coming up. And obviously, tech is very, very sensitive. The first thing that gets cut is tech, if we go into recession. So that's the concern. Tech gets cut if you go into recession. Growth stocks underperform, value stocks outperform. And so the NASDAQ has led the way down on this more recent sell-off in here. NVIDIA particularly, remember Goldman Sachs, the most important stock in the world right now. So the negativity particularly around NVIDIA as well. There were concerns around NVIDIA and antitrust. But then we've also got concerns around the hard landing, and that's what's really driving markets to lower over the last week in here. Some of the data coming every time there's a soft piece of data, a more negative piece of data, a piece of data indicating a hard landing, a recession, what we're seeing is stock sell off. When we see a more positive piece of number, they don't get much of a bounce, so the market is definitely half glass empty at the moment, that we're heading towards a potential recession, that we're going to go for that hard landing. So what we don't want to see is a number now 100,000 or below on this NFP non-farm payroll number in here, which I'm locating here. So expectation at 164. Now that expectation maybe is tempered down slightly in here, because we did get that worse ADP number. So around 150, 160, 170 is probably going to be okay. If it's down around 100 or below, then that's not going to be okay, and we could see a notable sell-off in here. Also keeping an eye out on the unemployment rate. The expectation was last time 4.3, ticking down to 4.2. If that ticks up as well, if you get a bad payroll number and that stays at 4.3 or goes even to 4.4 potentially, that will be a significant negative. Now, on top of all of this, you've got to be ready. Obviously, no trading 2 minutes before or after. Remember, no trading 2 minutes before or after. I'm going to say it one more time. No trading 2 minutes before or after the data release, which is in just under 1 hour time, in 55 minutes time. So no trading 2 minutes or before or after in that 4-minute window. No trading, no orders in the order books. You will lose your evaluation account. You will lose your funded sim account. You will lose your funded live account. Okay, can't make it any clearer than that. But please do be on the watch out after this as well. Also we're going to get probably a knee-jerk reaction. We could see then a recovery or a reversal of that knee-jerk reaction. Do watch out. We have Feds Williams speaking at 8:45 Eastern, and later today, actually it's not till 11 o'clock, so markets close. 11 o'clock Eastern, we get Waller speaking as well. So those are going to be potentially. We got Waller here. We got Waller earlier, so we got Waller 11. I thought it was earlier. 8:45 and 11 o'clock. Williams and Waller. Watching out what they say. Watching out if they react to the employment report. Watching out if they take a dovish shift in here. That's going to be important as well to watch out for. And why is it particularly important with those two? Well, they're the last ones that are going to get to speak now before the Fed goes into blackout. Remember, we've got the meeting 17th and 18th, Tuesday, Wednesday next week, with the result coming out on Wednesday as ever from the FOMC Federal Reserve meeting. They go on blackout from tomorrow. So today's the last day. Williams and Waller are going to be the last speakers we get. They're going to get a chance to react to that employment data. Let's see what they've got to say. That could see the market move significantly. If we get a very dovish comment from Williams or Waller saying, well, we're probably going to have to go 50, we're going to have deeper rate cuts, anything like that, anything that sort of steps them a little bit more dovish, that could be super important. So watching out for those as well later on today. They're going to be important times to mark in your diary. So a lot of the headlines, obviously summarizing what I've said there. I'm going to skip through the headlines. Payrolls, Williams and Waller, a big decider. Yes, it is a big day in here. 5 things to start your day. Focusing, first of all, on the jobs report. Obviously, market preparing for payrolls. Eyes on employment in here. 165,000 is what is expected, 4.2%. We've already said that in here. And now look, so the numbers may decide the size of the Fed's rate cut. So investors currently pricing about 35 basis points of easing, suggesting they are uncertain as to whether the rate cut will be a quarter or half point. Let's look at that as we go to the Fed Watch tool. Broadcom shares tumbling pre-market, not going to really impact us. What's going to be, it's significant, but you know what? This payroll data is going to override that. Apple approves WeChat, again, important, but today, not really that important. And the Euro economy continuing to show that weaker data. I already highlighted that German data in here that we saw this morning. I think this is significant. US jobs report may show hiring bounce, decide the size of the Fed cut. Forecast for 165, 4.2%. Last month's report sparked growth scares. Where's the Hartnett? I want the Hartnett one. Stocks fall ahead of jobs as slowdown fears mount. Saying it's all on the concerns about hard landing. A slowdown in here is going to be more significant in here. Futures already down significantly in here this morning. And pre-market, Nvidia down as well. Markets on 10 hooks ahead of jobs data. Yen up. Remember, yen is a safe haven. Yen higher today as well. Futures slip ahead of key payrolls data. It's all the same stuff in here. European market shares drop on caution ahead of a US payroll. What else do I have for you in here? US job report may show hiring bounce, decide size of Fed cut. We've already done that one. I've already got that. European shares drop on caution. I'm repeating myself in here. Here's the Hartnett one. So bank, I'm going to share this one. If you can access it, have a quick look in here. I used to work with Michael in here. He's a great economist in here, and he's talking about the Philadelphia semiconductor, and it's made fall 16% on poor jobs there. I don't think he's talking about in the day. He's not talking about in the day. He's talking about where it's going to go down to over time. He's not talking about it going down there in the day, but saying that a poor jobs data, perfect pay report to reverse defensive outperformance. So at the moment, defensive stocks, value stocks are outperforming growth stocks. We may see that reverse. We may see a pushback into growth stocks if the numbers come in line. So semiconductor shares, including Nvidia, are in for a rough ride, blah, blah, blah. Reading below 100,000 together with an unemployment rate of more than 4% could trigger a sell-off in stocks, sending the Philadelphia semiconductor, which includes the Nvidia, Broadcom, and Advanced EM to around 4,000. Michael Hartnett wrote in a note that implies a 16% drops in here. But then he does go on to say that's the hard landing scenario. Fed would do a 50-point basis point rate cut in here. Treasury yields would go down to 3% from the current 3.7 on the 10-year note, and oil would go down to $60 from 70. This is not in the day. He's saying over time. This would be like an intermediate term reaction. A perfect payroll reading of 150 to 175 will point to a soft landing and trigger a reversal of the recent outperformance of defensive stocks, and that's underperformance of growth stocks. That would benefit technology and energy shares. So, Hartnett, I do respect Michael. I think, nailing it there. We're in a bit of a knife edge, and that's not a big difference, right? Whether it's around 100 or whether it's 160, we're talking about 60,000 jobs, which is not a lot, and in the grand scheme of things, and that could see the pivot of whether the market goes significantly lower today or whether the market sees a significant rebound today, because we're obviously already significantly lower. So we can skip that one there. Asian stocks down this morning. Nikkei's down 7/10. European stocks also low. We've already kind of covered this. 3/10, 6/10, and 0.25% in here across the UK FTSE, the German DAX, and the French CAC. And US futures notably down in here this morning, nearly a percentage point. 9/10 down on the S&P, 6/10 down on the S&P. Sorry, nearly a percent. 9/10 down on the Nasdaq, 6/10 down on the S&P. The S&P 500 mid cap down 400. The mid cap 400 down over 1% this morning. Just want to touch on these so we know where we were. So when we do a recap on this, which won't be till Monday. So we're basically a 60-40 split for the September meeting. 60% chance of only 25. In here, around 40%, so 61 and 39 and 61. 39 and 61. If we remember, like roughly 40-60 split, with more of a weighting towards only 25 basis points. But by year end, if we look in here, there's now only a 14% chance we get 75 basis points of cuts. Okay, only a 14% chance. So we've got 86% chance we have 100 basis points here or more. And now we're building up on this side in here. If you're looking now, this is 46% chance. So it's nearly 50-50 between here up to 100 basis points, and near this is 125 basis points. So the market's maybe now starting to price in a 50-50 chance of 50-50-25 on the rate cuts in here going into the end of the year. Let's remember those numbers. We can always track them in the historical data in here when we come to looking how that's panned out on Monday. Obviously, yields in here significantly lower. We've had a plunge in yields in here, breaking out of this range in here to lower yields, but that's not helping stocks in here. So this is being driven more by concerns about a recession, lower yields in here, concerns around a recession, rather than hopes of more aggressive rate cuts from the Fed. And you can see we have already switched a few days ago in here to more bullish right across the board. And you see that's led more from the long end. The long end is looking more bullish rather than the short end. Remember, the short end more reflects 2-year, 5-year more reflects interest rates. The longer end in here reflecting the state of the economy. What else have we seen? So stock on the stock side in here, we're clinging to a bullish view. We're down through the important support in here. But let's see how we get through the day in here on the S&P. And we already turned more negative on the NFP. But we are wary of a rebound. This is on a knife edge. It can go either way. I'm not going to take a look at the analysis. I'm not going to any depths in here. But I mean, we've already come a long way down. The Nasdaq's significantly off the highs and is significantly off the more recent high as well. So we've already had a significant sell-off. I'm not saying it's going to stop a further sell-off, but if the number's not too bad and we see a sell-off, if we see the market, if the number comes in around 125, 120, that kind of area, we'll probably see a sell-off initially. Value buyers could easily come in and buy on that dip. Okay, so watching out for that. Same story for the ES. We're significantly down in here over this week. Value buyers could step in if we see a sell-off. If the number's not down, if it's down 100k or below, I think we'll just see the market just sell off. If it comes in between 100 and 150, I think it will sell off and rebound. If it comes in at 150 or above, I think we rally. Okay, that's my view. Okay, so there's your scenarios, guys. All right, I'm going to wrap it up there. I'm going to wish you all a great trading day. Helmets and goggles on. Ready for payroll. I'm going to be back with you with another Bull versus Bear webinar on Monday. Be safe out there, guys, with your trading. Keep the stops tight in here. Be careful and watch out for potential reversals through the session. And don't forget, we've got Williams and Waller both speaking as well. Check out those times again. Don't forget Williams and Waller. And also don't forget no trading 2 minutes before or after the data release. Have a great one. Smash it. Take care, guys. Bye.